Hello everyone, and thank you for tuning in to the weekly update with Oakwood Financial Group. I'm Joshua Dobi. Thank you again for your willingness to engage in this medium for this update. I feel like I can connect with you at least a little bit through this medium, and I appreciate so much your willingness to spend time and to hear what we have to say. I hope that you're healthy and well. I know that it is the go back to school time for so many of you with young ones and with grandchildren, and I know that that is an exceptionally challenging time right now. As the father of a second grader and a fourth grader, it certainly has been an interesting start. We're getting very used to working with our iPads again and doing Zoom video calls with teachers and all of that good kind of stuff. And again, you folks with kids and grandchildren doing the same thing, you know exactly what I'm saying. So again, I hope that you're healthy and well, and appreciate so much you spending the time here. All right, let's go ahead and dive in to what's happened here over the last couple of weeks. A whole lot, frankly, has been happening, but in the interest of time and to give you pertinent information quickly, we're going to just touch on the highlights of what we've seen here. First, again, because it's such a huge indicator of what's happening in our economy, unemployment claims continuing to trend down, both in terms of the new claims, which are about 1 million a week right now, and the ongoing claims, which are trending down as well right now at about 14.5 million. Not a real reason to get excited, especially relative to pre-COVID levels, but encouraging to see that both of those trend lines are continuing to decline. And that's a direct function, I'm certain, of the several programs which are in place encouraging employers to bring folks back on board. We've still got to get through some mess as far as additional legislation is concerned. I'm going to talk about that in a couple of minutes here in terms of what's percolating through Congress right now, but still encouraging to see those trend lines. Second big item out there, we saw a significant announcement from our chairman of the Federal Reserve Board of Governors, Jay Powell, or Jerome Powell, this past week. I don't want to get too wonky on you. It probably puts you right to sleep. Sometimes I think it puts me to sleep. But some pretty significant indications from the chairman about a shift in policy with the Federal Reserve. Now, again, without getting too far into the technical indicators on it, in short, what he said was, yes, we're going to be mindful of inflationary kinds of things, but not making that our primary mandate, meaning that they're going to allow inflation to fluctuate a little bit more in the interest of making a focus on the unemployment rate. Now, again, there are a number of different faculties in play there, but what does it mean for us? What does it mean for individuals? What does it mean for Main Street? A couple of things that it may mean. Frankly, it's a good indicator for the stock market. Now, again, I'm not saying that because the market's going to go straight up. As a matter of fact, I'm quite certain that it won't, because it never has. But in terms of the ways in which the Federal Reserve has said that they're going to stay out of the way of companies who are making capital expenditures, hiring employees, they're actually going to be encouraging that through their policies. So again, I would consider that just off the cuff to be a positive sign. Again, not an indication of any kind that the markets are just going to go straight up. That would be unnatural and unhealthy as well. But definitely a clear indicator from the Federal Reserve that they are hyper-focused on getting folks back to work and also in allowing companies to stretch out and to continue to invest in themselves. So again, a very encouraging kind of thing. So good news on the unemployment claims, good news from the Federal Reserve Board. All right, upcoming legislation. Now, I feel like a little bit of a broken record because I've said this now, I know, over the last several updates, pay attention because the Congress is going to be coming out with some updates and some updated legislation. Still hasn't happened yet. And Congress is in recess. There's summer recess. So definitely not going to happen. It doesn't look like, unless a special session is called back in. Definitely doesn't look like it's going to happen until sometime after Labor Day. But because of all the public rhetoric, we're able to get a little bit of an idea about where there seems to be some agreement, and then there are places which there is wide disagreement. But some of the places of agreement seems to be agreement on some level of direct payments to individuals. Now, that being said, there was also another move made by Republicans this past week, which is being called the skinny COVID relief package. I don't know how we can think about skinny in terms of $500 million, but it is the world in which we live today, which did not include direct payments. So it seems like that has been a shift a little bit, but at least up until that point, it looked like there was some agreement on additional payments directly to individuals and perhaps those who care for dependent children. One space where it looks like there is agreement, just not on the dollar amount yet, is on an increase in the unemployment insurance for folks who qualify for unemployment insurance. Now again, that may take on any number of different flavors once we get to actual conclusion. But in terms of the rhetoric, in terms of what has been coming out publicly, it appears there's going to be some expansion above and beyond, quote, normal unemployment, again, for those who qualify, who have been let go or furloughed from their jobs. Third big item that looks like there's some level of agreement. The Small Business Association, or small business faculties. Just like we had with the P3 loans and with the EIDLs there in the first round of the CARES Act that came through, a lot of different faculties that were out there for the small businesses. Rather, it looks like that's going to happen again. It looks like there's general consensus that there needs to be some kind of additional help for our small businesses, especially those ones who in some instances have been on near lockdown, if not complete lockdown, since mid-March. And so definitely some encouraging words there in terms of what folks are indicating in Congress as far as those faculties being included in the legislation. So three big items on that. Lots of disagreement about whether there should be direct payments made to states and municipalities, again, mostly along party lines as far as that's concerned. Lots of disagreement also about how much the additional unemployment insurance will be, and about how that's going to go together. So stay tuned on that as soon as that makes its way through. And like I said, at this point, it looks like it's going to be after Labor Day. But as soon as that makes its way through, I'm going to jump on the video again and send out an email blast to all of you so that you can take a look at what are the high points and what are the points which may affect you or perhaps folks that you know. And make sure that you have that information as quickly as possible. Now, I don't know about you, but because I went through the CARES Act literally page by page, I'm hoping it's a couple pages fewer than the 880 odd pages that the first one was, because we'll be able to get it out there to you faster. But if it is, we'll do what's necessary, and we'll do a little light reading during our evening hours. As far as where the markets are concerned, still a lot of treading water right now, meaning that over the last several weeks, yes, we've hit some, quote, new highs, but there hasn't been a whole lot of momentum in the markets. Now, in the short run, frankly, that doesn't matter, and we don't do planning or manage portfolios in that way. But we're looking at things in terms of how much recovery there has been since mid-March, and it's been great to see. I'm very thankful for it. But we're also looking at spaces where we're probably due for a pullback because of how quickly it has responded. Now, that doesn't mean that we're going to have a pullback, doesn't mean that markets can't continue to push ahead. But we are very mindful of watching this market in terms of how narrow it is. And when we say it's a narrow market, that means that there only are a handful or a relatively small percentage of companies which are doing very, very well. And we have a legion of companies over here which are suffering miserably. And I don't need to tell you, those ones that are doing well, you know those big tech names, Facebook, Google, Netflix, Amazon, all of those monsters, are Apple doing exceptionally well right now. And then literally legions of companies over here, especially in financing, financials, and in the oil, gas, and energy sectors overall, really having a tough go at it right now. So again, a very bifurcated market, but a very narrow market in terms of what's pushing the indexes ahead right now. So be mindful of that. Not saying that the market's going to crash. That's not what we're saying at all. But definitely be mindful of it. Be mindful of how quickly markets move. When it is just as unnatural for them to quickly move down as it is for them to quickly move up. I just took a look at some data this morning, and among them, I noticed that the price of Apple stock is up about 70% this year. 70. Now, you know, I'm pretty conservative when it comes to planning. 7% would be a great year as far as I'm concerned. Apple's done 10 times that here in 8 months. So way ahead of the curve as far as growth is concerned. Definitely, probably some time for pause for those biggest high flyers that's sitting out there. So again, just be mindful of that. Keep a watch over it. All right, well, that's the update for this week. Thank you again for your time. Appreciate so much. I want to be respectful of it. At any time, feel free to reach out, give a call, send an email. If you'd like to jump on one of these fancy Zoom video calls, I'm happy to do that as well. I'm also happy to talk about whether you got kids or grandkids going back to school and how much of a challenge that is. And as you see me say in so many of my emails, also if you'd like to talk about the Pirates and how long it's going to take for us to reorganize, again, it's not a happy subject, even though I'm chuckling, but I'm always happy to chat about that fun stuff as well. Well, friends, again, I hope this finds you healthy and well and safe. Please, at any time, feel free to reach out to me. Until the next time, I'll look forward to talking with you soon.